It's the only strategy, Nick, where I generally felt after it's finished that it's a win-win-win. This is the ultimate not get rich quick scheme. But once you do get that lease signed, we've got properties that we've not heard about in 2 years, apart from an email to say your rent will be going up in April. That's the bit which works.
And that's the attractive bit, I think, for anyone out there looking for that elusive passive income.
So we learned a little bit about what we term the specialist supported living market.
Can you just give us a synopsis of what is supported living as a strategy for investors? We'll get to the downsides in a minute, but yeah, I'm sure there are some.
The straw that broke the camel's back for us was
building wealth through property isn't about chasing big deals and paydays. It's about owning assets that make money for you consistently. But figuring it all out on your own, that's where most people get stuck. That's why we created this Property Life membership. It's everything we wish we had when we started. Expert guidance, real-world case studies, and a private community of investors actually doing deals, not just talking about them. So you could spend years trying to piece it all together yourself, or you could plug into a system that's already working for our community. Check out our membership page at This Property Life. Everything you need to know is right there. Success is a team sport. Come join in. Hi, and welcome to this week's episode of This Property Life. I'm Nick Claydon, your host today. Today, I'm joined by a friend of mine who I've known for quite a long time in the property world, Ben Green. Welcome, Ben.
Hi, Nick.
Ben is an expert in supported living, social housing strategies, which we're going to talk about. Yeah, let's get into it. And Ben, tell us a bit about how you got into this and how you started in property. And a big question to kick off with it.
Yeah, no. Well, let's deal with chronologically. 2010 was when we decided to go into property. My wife and I, before that, corporate background, sales, marketing, etc., etc. Normal story, working hard, not getting a lot of time. Got sold a dream about something called passive income, which I'm sure we could all relate to. Still looking for the passive income. It's why it's led me to where I am today, actually. So, yeah, look, we started buying houses properly in 2011, probably when economically the world was in chaos and everyone was telling you not to do it. So, again, probably very much like 2025, right? And with hindsight, best possible time to start. So we went through buy-to-lets, HMOs, mixed-use properties, commercial to residential conversions, and over 9 years built up a decent portfolio, mainly in the northeast, and living either in or close to London. It always meant a lot of traveling. So we got used to kind of 8-10 hour day round trips to places like Hull or, Wigan or other places like that. Yeah, really, really living the dream. And it was fine, but all the trials and tribulations on the way, contractors, good, bad, and the ugly. Same with letting agents. Some good deals that could have been great, some bad deals that could have been good. Everything just either conspires with you or conspires against you. And I think by 2019, we were certainly tired. I think the straw that broke the camel's back on the private rented sector for us was we'd finished another 5-bed HMO, best one to date, looked amazing. Yeah, and you were just generally really proud of it. 36 hours into it being occupied, we had a phone call from the letting agent that a tenant was unable to use both a shower curtain and a shower screen and had flooded the bathroom, whereas it actually then collapsed into the living room. And that was the point. We were just like, it's 9 years now. And
you're still not over it.
Yeah. And then you have issues with letting agents. So, we had the right people in place to, manage the business. You still end up babysitting the babysitter, Nick, I think is the best analogy. And that was it. Got offered a very large, what we thought was a very large sum of money for the portfolio by this mysterious kind of investment fund thing. And a little bit about, I didn't really understand, but we sold it and then learned what they were doing with it, which was essentially putting a long lease around it with a housing association. And then they sold it on to an investment fund at far greater profit. And that was my first exposure to supported living, albeit the wrong way, but got us thinking, great. We then had a pot of money, but no income. And 4 months later, locked in the house with my wife with nothing to do, it became very apparent that we needed to go and do something new because the money wasn't going to last forever, and nor was living in the same house as your wife 24 hours a day, if that makes sense, after spending
challenges.
After spending 9 years of doing a business together. So that really led us into looking for a new strategy.
Before we jump in, let's tackle one of the biggest hurdles for property investors: finding the best buy-to-let locations for top returns. Over the years, we've helped countless individuals pinpoint the most profitable locations and maximise their rental income. To make it easier for you, we've put together a free guide to buy-to-let hotspots for 2025, designed specifically for you to understand the market, stay ahead of the trends, and it even includes a list of our top 10 locations in the UK. Get it now for free by clicking the link in the description below and start building your property portfolio today.
Brilliant. Well, that's like a fantastic synopsis today. So that's like squeezed 15 years into about 2 minutes, which is great. So you and I met probably back in 2010, 11, I'd imagine.
Something like that.
And we kind of followed, what you've been doing, and knowing that you've been, I didn't know the detail of that bit of the, where you learn maybe put a wrapper around a whole portfolio and selling it into a pension fund. Was it a pension fund in the end bought it?
Investment fund.
So that's really interesting. And then, so that kind of led you into thinking about how can you, I always think, my view on anything is when you learn something new is, well, if someone else has done that, why can't I do that?
Yeah. And I think it was again, the worst and the best time to do it. So we learned a little bit about what we term the specialist supported living market. And I think there's 3 kind of areas within supported living. I think there's that kind of Serco Mears asylum seeker bracket. Then there's that middle bracket, which is maybe for people around homelessness, where you've got one organisation giving a bit of floating support on a weekly basis. We, for some reason, went straight into what is termed specialist supported housing, where we've got people maybe with learning disabilities, autism, mental health challenges. You've got separate care organisations, separate housing associations. We learned how to do it properly, which initially was really difficult, still is difficult, but there's been a lot of changes in the market. I think like any strategy, it gets exploited, and this sector is no different. It's been exploited. And we've probably spent the last 2 to 3 years suffering the fallout of bad investment funds, bad developers, but also bad counterparties in the middle being involved in the sector. So we've learned a lot. And I think there's kind of a new wave entering that specialist supported living sector, but also the homeless sector, where it's probably better quality counterparties or tenants, i.e. the housing associations or charities that we're working with, better covenants, which is good. Yeah, there's been a lot of learnings, both personally, but I think industry-wise as well. So, yeah, it was never meant to be easy. And we did our first development right at we got it agreed prior lockdown, so pretty much 5 years ago to the day. But yeah, I think we had our funding agreed for the first project March the 16th, 2020. And then March the 19th, the funding was very quickly pulled due to lockdown. So that was a good
fun
intro.
time.
Yeah, perfect. So our first 2 deals that should have taken 12 months took about 26 months.
Yeah, for anyone not quite sure, using terms like supported living, I think maybe people getting into property investing hear about social housing, or they hear these terms. And social housing is obviously a huge, broad subject. It's like saying commercial property or property. There's so many niches in it. And then even within supported housing, I guess, as well. But if you kind of had to boil it down, so to for anyone that's not sure what it is, can you just give us a kind of synopsis of what is supported living as a strategy for investors?
Let's break it into kind of 2 or 3 clear sub-strategies, if you like. I think that first one is that Serco and Mears strategy, where you've got that contract with one of those big entities, typically the asylum.
So that's if someone has a house and they approach these entities, housing associations.
Well, Serco and Mears, obviously big corporates that have got the contract directly with the government to house either asylum, or I think Mears have got the Ministry of Justice contract as well for probation. So you would present a property, be it a flat or 4, 5, 6 bed HMO, whatever it would be. And Serco will run a very simple kind of postcode check and say, yes, we can accommodate another property in that area. They obviously work with stakeholders in that local area. And you receive a contract probably based around, I would say, the local housing allowance rate, give or take. Some areas are slightly higher, maybe some areas are slightly lower. but essentially they take on the full running cost of that property and they take it off your hands for up to 7 years. Simples, right? But
sounds simple, but really is, I guess.
Sounds simple, but like everything, there's always a changing landscape. And I know we've never really focused on this area, but I know a lot of mutual contacts of ours that would have got the green light to buy and develop a property for maybe one of the aforementioned companies. And when it's come to handing over, no, sorry, we've had to shut new deals in that area. We've got too many, or the local authority have said no more asylum seekers in that postcode. So you're running a bit of a lottery, but it's probably a simple, in theory, way through the door. The next kind of step up is that what we would term the tenant cohort. So the tenant group is probably homelessness, maybe drug and alcohol rehabilitation, domestic violence victims, where you've got an organisation that will offer something called intensive housing management. So it's,
okay.
I would probably go to a company. They would say, look, we want 4 ensuite rooms in this postcode. So they go and look at the property. It works for them. They're taking, so this entity, this housing association or charities, is got a direct referral, a direct pipeline of referrals from the local authority. So maybe they're working with the homeless team in a local authority. Look, we've got 150 people that we need to house. Yesterday, they're currently in bed and breakfasts or completely unsuitable accommodation at a very high cost to the taxpayer. And they move them into these properties, and that organisation that we would take the lease with, we're not taking leases with local authorities and councils. I think that's really important to stress. And why would you? I know people that used to do that probably 10, 15 years ago. I would, for a number of reasons, say always put an entity in the middle between the local authority and yourself as the landlord and the investor. And they will, you'll build or develop that property to a specification, and you'll hand it over quite often on full repairing and insured lease. So very similar to the commercial leases you get. Again, 5, 6, 7, 10 years.
So just to clarify, and if anyone's not sure, full repairing and insuring lease being that the provider or the organisation you have a lease with, they insure it. If anything goes wrong, they repair it.
So go back to my tenant flooding the bathroom story. Don't care anymore, really, because it's not my responsibility. It still happens. Kitchen cupboard might break. You'll never hear about it, in theory. So I guess, Nick, it takes away all that day-to-day stress. And as I said, even if you've got a letting agent and all the systems and processes in the world, you're normally still the person having to authorise spend and repairs. So it does remove a large element of that time. So that middle sector, that intensive housing management strategy is probably again, in hindsight, we should have entered going in on that strategy, because we've got one entity, and again, the rates can be based around local housing allowance, maybe plus 10, 15%, depending again on the types of support that company is offering. But yeah, they'll send people around, throughout the week to check on budgeting, to check on the individual's well-being, as well as having eyes on your asset. So essentially, it's like a letting agent that you never hear from, if that makes sense, which sounds great, doesn't it? Yeah. And then that third kind of strategy is the specialist supported living, where we've spent a lot of our time, which is working with local authority, what's called the commissioning team. So adult healthcare commissioning, or the NHS, or sometimes both. Now, it will vary in Scotland, but the principle remains the same. We work with local authorities who maybe have got adults with learning disabilities, or people that are turning 18 that live with mum and dad, or they've been to college, but maybe they've got an autistic diagnosis, mental health issues. They can no longer either live at home, or the extreme example, which we've all seen, is people went in for a mental health check in hospital, and 10 years later they've been, they're still there because they've been assigned to a mental health ward because they've got autism. Now, if you look at the number one reason, I think quite a lot of people on this would have heard of the term bed blocking within the NHS. So there's people in hospital that don't need to be in hospital. It's called bed blocking. Well, this strategy alleviates the pressure on the NHS. So the local authority and the NHS will have a certain number of beds or facilities. The number one reason why people cannot be discharged from hospital is accommodation or lack of suitable accommodation. So while our specification is a lot higher because we're dealing with adults, learning disabilities, autism, mental health, and we're having to work with the local authority to sign it off because we're getting what's called exempt rent, which historically has been abused, but we make sure we do it properly. So we're not capped at LHA rate, so we can get higher rent, but we have to show that we're offering a suitable accommodation. We have a separate care partner that offers the care. We don't have anything to do with the care package, but there is a separate organisation that we will work with to design the property for those individuals. The third entity then, so you've got local authority, a care partner, and then we have a housing association. So a housing association, just like that other strategy, is our tenant. They will sign the lease. So we take a lease with that housing association. Now, all of these are registered providers or RPs. So they are regulated by the Regulator of Social Housing. So the care company is overseen by the Care Quality Commission. The housing element is overseen by the Regulator of Social Housing. So straight away, we're operating within a regulated environment. So standards, everything is a lot higher. Barriers to entry, a lot higher, and rightly so because of the vulnerable people we're housing. But done right, you're freeing up space for the NHS. You're allowing people to move from a very institutional clinical setting to a home, which is what they're quite, they want to go to town. They want to do their own shopping. They just need care and support to do that. And from a taxpayer perspective, I think on average, the average placement probably saves the taxpayer between £1,500 to £2,000 a week. And there's a 300,000 unit shortage within the sector.
Amazing. But landlords are evil, Ben. So surely you can't be doing something good, right?
But again, and this is, we've been accused of exploiting vulnerable people. And it's your typical, it's the Facebook crowd, isn't it? But really, I would say, Nick, all of us will either directly or indirectly have had or come across a family member or a friend learning disabilities, autism, and or mental health. So from a social, and that term, social impact, I kind of cringe when I hear that because it's like the word government backed, which we'll get to. It kind of makes me cringe. Everyone uses in this sector, it's government backed and there's social impact, but we do get quite granularly involved in the individuals moving in. So, we've got one that we're doing in the northwest of England. The individual's been in hospital for 3 years. They've been trying to discharge him for 18 months. And only yesterday we had a call. I think there was 8 of us on the call. He's got 4 carers. So we had the social workers, the occupational therapists, the new care company, the housing association, someone from the NHS, but also his sister on the call about designing the property that he's going to feel good in. It's down to the point where he wants a library. Fine, we'll make him a library in one of the spare rooms. He wants this colour on the wall. Really not a problem for us. So yeah, we're absolute parasites for giving someone that needs and wants their own home exactly what they want, and also saving every taxpayer in the UK a truckload of money. But someone's always going to find an angle, right?
Yeah, they will. And I think, unless we really understand, they don't really get it. All landlords are bad. We're all leeches on society, but actually, this is a strategy by which you can actually genuinely help, give back, feel good about, and maybe not enough people know about this. And the other question is, if you're not doing this and not people like you, who else is providing this accommodation?
It's the classic example of, government or the anti-private landlord bashing. Without us, the problem gets worse. Now, as I said, there's been historical issues with the moment investment funds get involved, then it becomes very much about finances and numbers.
Yeah.
But I would say that the industry is on 2.0 right now. It's gone through a big reset. So there's a lot more, I think, due diligence about the providers, the people that we're working with that sign the lease, they look after our asset, but they're also there to look after the individuals. The individuals actually have their own AST as well with the housing association, which is great.
Right. Yeah.
So they've gone from that care and hospital setting to actually having a degree of autonomy.
But that's amazing. Take someone who's been in hospital for 3 years, did you say?
Yep. Yeah.
And obviously that individual is desperate to get out of hospital and
Yes.
have some kind of autonomy and live in a
Yes.
home rather than a
Yes.
hospital. You know, and you're providing that environment where and building it to spec essentially.
Correct.
But if you're going to do that and you're going to build to spec, then I guess from a business perspective, what's in it for you to do that?
Well, we get the higher rent and a good return. So yeah, we get a lease which is 10, 15, 20 years in duration, which obviously is massive compared to, especially with the rental reform bill coming through. It's a game changer. Essentially, we've got a C3 property, C3 use property, but that's the only residential element. Everything else is commercial as far as we're concerned moving forward. So we can get commercial lending, huge benefits on the refurb. So, you said you're doing a commercial conversion at the moment. Obviously, the VAT goes from 20 down to 5%. We can claim that. There is an investment market coming back slowly, although there's a huge caveat on that in terms of we've struggled in the last couple of years to exit, but that's changing. It's a great strategy. Look, the challenges are finding the right counterparties, making sure you've set it up properly. It's a complicated strategy with many, many moving parts, and lending's been an absolute nightmare. I'm not going to lie.
Lending, yes. Because we've got a little bit. We've kind of dabbled a bit in social housing. So we've got a couple of properties up here in Scotland where we have leased them to Link Housing.
Yeah.
And they've been great, and that's been 10-year. Well, initially signed a 5-year lease, and then they came back and changed, and then said, "Would we sign a 10-year?" It's like, where do I sign? Yes, immediately. Yes. How much money have I spent on that property? It's been about 12 years now. They replaced the whole central heating system in the property, and it's been one of our best investments. But the problem has been the lending on that one. Because, and this is, I think, where a lot of maybe amateur investors or beginners into this, and you'll correct me if I'm wrong, but I think a lot of people get into this thinking, or they have an existing property on an existing mortgage and then think, well, I can just sign a lease on this and it's fine because it's guaranteed rent, right? So why would the lender have a problem with that?
Yeah, look, I've never been a rent-to-rent fan on a normal strategy, but I know people that have been trying to do supported living and rent-to-rent. It's going to be immediate breach of any mortgage. It doesn't give exactly. So I think probably 90% of people doing that are doing it wrong. I'll make a bold claim there that will probably get me a few more haters, but what's a couple more to add to the pot? But it's true. Yeah, but it's about doing it the right way. And I think we've always done it where, as I said, we've gone the hard route we get it signed off by the local authority. And I never knew we've got a planning use class of C3B. I never knew that existed. I've been in property for 9-10 years before I learned about that. And, we've had planning officers. Yeah, it's like up to 6 people. Well, it's brilliant because we've even done this in the middle of Article 4. And because we use registered providers as our housing associations, they're also exempt having to have licenses, HMO licenses. I'm not saying we don't do it to spec, but again, it's just another piece of paper that's removed. But our biggest challenge has been the valuation and the lending. Now, we've got to a point where we've got valuers that understand the model, and we've got a handful of lenders. We can get the investment value over the bricks and mortar, but again, you're going to pay for it. But actually, if I'm paying 2% more than a buy-to-let mortgage, but I've got no other running cost of doing business.
Yeah, and I think I think where maybe more amateur investors or beginners into this is where they might get a bit lost when we start talking about commercial values. And I don't know how many conversations I've had with people over the years about, can I get commercial value on an HMO? Well, it depends, So, but just maybe a quick overview on the social housing side stuff that you do. What is commercial value? How do lenders look at it, and how do we kind of pull that together? I always imagine it's like a jigsaw, and we had a chat the other day, and you said you kind of think of it in the same way.
Yeah, the whole sector is about jigsaw and putting it together. But on that lending piece, look, I always use a coffee shop analogy when it comes to lending, Nick. If I've got a property and I put Ben and Nick coffee shop in I'm going to give you a 25-year lease. Everyone gets really excited about the length of the lease for some reason. But we've got £4.50 in the bank and we've got no trading history. What's that 25-year lease worth? Right? Despite us being amazing people, right? If we go and put Starbucks, Costa, or Cafe Nero in the same property on a 10-year lease, what's going to be valued higher?
Yeah, exactly. You now got and that's the covenant, right? So that is the, blue chip.
Exactly that. So I've always used that coffee shop analogy. So I'd far rather a 10-year.
I'm going to steal that, by the way, if that's okay.
All the best speakers steal lots of different ideas from everyone, right? But yeah, I think really we go for the strong covenants that we know can get good lending. And again, this is where the sector thankfully is changing. That I've got a 25-year government-backed lease. Well, we could pull that apart in minutes, those claims, because to be genuinely government-backed, local housing benefit team will claim it back from the Department of Work and Pensions. That's the rent. But one of the key criteria for that is that there's a registered provider as the landlord, as the housing association. A lot of the guys that were offering these 25-year leases were CICs or CBBSs or whatever they were. The local authority legally cannot claim 100% back from central government. So how is that? Tell me how that lease is government backed. It's not. So there's loads of holes in it. But if you get the right registered provider with the right covenant, you'll get a valuer apply a yield to that. Now, those yields can be as low as 6%.
Yeah.
Probably, I would say the range at the moment is between 6 and 8.5%.
Yeah. So for anyone not sure what that means, the lower the yield, the higher the value.
Yeah, it's counterintuitive in the commercial world. So we look for a lower yield.
Yeah. So low yield means higher value.
Yeah. So I would say on average, our proper specialist supported living schemes, our average value is around 7 to 7.5% valuation, which is just brilliant.
Yeah, it's strong, isn't it?
Very strong.
Yeah. And in terms of kind of exit plans on this, you kind of briefly touched on exits. Feels to me like this is there's a quite high barrier to entry getting into this knowledge wise.
Yes.
Pulling a team together. But the rewards are there in terms of get it right, do it properly. Yields are there, therefore high values are there. So there's your rewards and income, which we haven't really touched on yet. I'm going to assume is going to be pretty strong on these and, guaranteed for however many years you sign the lease, upwardly reviewed. There's lots of green lights, tick boxes, green ticks in the boxes here. And then, if you wanted to, what is your plan in terms of exiting? Is this a long-term hold? It feels like a long-term play. Is it a long-term hold? Or are you looking?
It's turned into a longer-term hold than we thought. We had exits lined up with all the big players. I mean, there's big players and then there's the big institutional players, right? And you don't walk into one of these big insurance groups with a 6-bed HMO in Liverpool. The barrier to entry, the barrier to entry is normally about 20 to 50 million pounds worth of stock. But there's also a high net worth individual, family office play. There's also investors that have probably like us been through it for the last 10, 15 years that are just going, I know property's still good, but I'm absolutely fed up to my back teeth with builders, letting agents, lenders, valuers. Just give me something turnkey. Just give me a hedge against inflation. And also that I know that I'm not going to get a phone call at 3 a.m. in the morning about.
I mean, that's huge. I think that is a big sell for.
And people will pay a premium for that. Again, when we started, you create the value, right? We had to create the value. Now I can take a brand new house in theory and still create value through the lease. So I guess my mindset of value add has been completely flipped. And personally, the less I add zero value on a construction site, Nick. You know that. 15 years in, I look at stuff and I haven't got a clue really. Exactly that. I've even stopped that. But the value I understand now is when we do have the right exits, it's matching them with those right covenants. So why do people buy Costa drive-throughs? Why do people buy Subways, McDonald's franchises? It's because of income. We're no longer selling property. We've actually started pitching it as long income, which is anyone that's worked in the investment world will understand. It's a long income product, government backed for 10 to 20 years. It's a very different sell to selling a buy to let to an investor or sourcing. But what we're doing now, and a lot of the work that I'm doing now, is actually working with developers that on a private scheme, it no longer stacks up. So we're now doing a lot of brokering and consulting where developers bring us a scheme and we're bringing in the local authority support. We're bringing in a care provider. We're making adaptations to properties. And then we're bringing one of our housing partners in and wrapping in one of these institutional grade leases, which gives your, I would say, probably a 20% uplift on your GDV. Now, for a developer struggling to get out of a deal because of the market and the cost associated with it, it's a game changer.
Yeah, I mean, that sounds it. I'm just running figures here in my head now on our current project, thinking tempting to hand it over, to be honest, with all the stress and problems I'm having at the moment. But yeah, I mean, that is really appealing, and thinking that actually that's you bringing all the knowledge that you've gained over the last few years to be able to provide a different angle that somebody may never have thought in a million years even existed.
That's the thing. But it's look, we were all taught that property is a people game, right? But this game is really about relationships and trust. And we found that local authorities, when we go into a new local authority, especially, I mean, we've delivered in 7 local authorities to date. So we've got referrals now, but like everything, it takes time, and you are just treated as I mean, the amount of developers which are in it for a quick buck, you know, I've got 4 flats above. I get a phone call from a care partner once a week, and we have a laugh on the deal of the week that they've been offered by a developer who's read something on Facebook, which is, think of the people which are living there. Maybe let's take someone with autism, where smell is a big trigger. And they've just been offered 4 flats above an Indian restaurant or a fish and chip shop on a high street next to a Wetherspoons. Is that really where vulnerable people with autism should be living? But because the developer's going, I can get more rent, they pitch it like that. And this is where a lot of now the care providers, the local authorities have put up a big barrier to entry. And unless you understand the language, I've got a whole new acronym dictionary. The barriers to entry are still there until you've actually delivered.
Amazing. I mean, you know, it sounds like something that I don't think probably enough people know about, even as a thing when they get into property. It feels very commercial, even though it's social housing or supported living.
It's hiding in plain sight.
Yeah, it's there. I just think people hear this term social housing or supported living, but don't actually understand what that is. And like anything that's worth doing, it's not easy. And it is about, as you say, relationships and knowledge, understanding that this is a thing, understanding that, you know, why it's beneficial to all parties. So beneficial to you financially, but also kind of from
it's the only strategy, Nick, where I've generally felt after it's finished that it's a win-win-win. It doesn't feel like that during, because again, it's still the work on the front end is huge.
Yeah.
And this is why we've been trying to, you know, not justify the sale price sometimes, but it's, if people understood the work and the time it takes to get these up and running, you're dealing with local authority, you're dealing with care. It's just, you know, if you think planning goes slowly, you try getting local. I mean, again, it's not the local authority's fault. It's just they don't have the resources.
Yeah.
So this is the ultimate not get rich quick scheme. This is, you might get some consistent income in about 12 months' time. But once you do get that lease signed, we've got properties that we've not heard about in 2 years, apart from an email to say, in line with the agreement, your rent will be going up in April.
Yeah.
That's the bit which works.
And that's the attractive bit, I think, for anyone out there looking for that elusive passive income. Passive income, as we all know, doesn't exist. Okay, there's nothing that's truly passive.
It's as close to it as you'll find, I think.
It's as close in property. It's as close as you'll get.
Yeah.
And you know, I think that's a big draw for a lot of people that are looking for income, you know, looking for yields and want that hands-off element. But and I guess that's something. Is that something you work? Do you work with? You said you work with investors who may be looking for turnkey solutions.
I think over the last few years, I'd say if you look at our kind of brokering, consulting pipeline, call it what you want, that's actually bigger than our own pipeline now, because think of all your barriers to entry on a normal development and the cost increases. Well, in many parts of the UK, people are now, the developing margins have just been squashed, right? If I can turn around and add value, I can't guarantee you an exit today because the market is still not quite there. But if I can show you a valuer and a comparable valuation with that same lease and say, I can get you a 7% val, that's where we're getting a lot of people come to us. Now, I cannot serve the demand of the local authorities I work with, my care partners. If I kept going for 50 years, I could not serve the demand. So it's one of those strategies. As long as you're doing it for the right reasons, I'm coming from the abundance mindset. There is so much demand to go around. And also, even if I'm a little bit involved in a project, my partners, the care and housing partners and the local authorities, I'm still helping them. Ben is still helping them. But the developer's doing the bit I don't like. My dream is someone that likes building. Don't know why you would want to do that.
Yeah.
And I can come in and basically do all my bit, which culminates in a really strong, bespoke property, which houses vulnerable adults, which gives the landlord consistent income with a really good lease. That is a win-win-win. It's been interesting. And I think, as I said,
there's a win-win-win. Yeah.
There's a lot of work to do around getting the right parties involved and the right developers involved. But look, the NHS, if you turn around to your local NHS and said, we could even relieve 50 hospital beds a year, what's that worth? In monetary terms, it's massive.
Yeah. It's just something I just didn't even know was a thing, in terms of getting people in hospital for years on end there because they've got nowhere to go to. That's nuts. And look, I think it's an amazing thing you're doing. And yes, we're in it as investors to create wealth and to make money. But there's a huge kind of, I think, upside as well in doing something useful to society.
We also get I think our kind of normal standard, Nick, on how we've been trained. And, when you hand over a HMO, even in the private sector, we've started to hand over some of our properties, and the quality of the accommodation in this sector has traditionally been very poor. We're even getting the care workers that come in are just blown away by, they get their own room, they've got their own area. We're making that effort to make it really good for the care companies to attract people to work there. The local authorities turn up and go, can we have another one? And all we're doing is our kind of normal standard with some adaptations. But and you get the feedback from the parents and even the tenants themselves. We had a tenant, he was a whole city fan, so had to paint the room a certain colour. That for that individual was just incredible, and it is brilliant. So it does work. There's just a lot of work and plate spinning to get to that stage.
Yeah, straight away. Plate spinning, yes, favourite subjects. But Ben, it's been an amazing conversation. I'm sure we could talk about this for a lot longer. But if anyone wants to hear more from Ben is going to our guest speaker at our next This Property Life networking event, which is on the 26th of April in Heathrow. Anyone, if you want to come and meet Ben and find out a bit more about this strategy and how it works, and to listen to him talk in more depth about this, then join us. Come along. Join us at thispropertylife.co.uk, and you can join our network, and it'd be great to have you there. Ben, really looking forward to seeing you again at the end of April. This episode will be going out just before that. How do people get in touch with you, Ben, if they want to connect with you, find out more about what you're doing?
So do all the normal social media stuff, which we can put out via you guys potentially. But as I said, there can't be many bald people that really stress that we're in property like me. So there we go. But no, all the normal social media channels I'm on, and I can share the details with you guys as well.
Yeah, so we'll put the link in the show notes for this episode. Ben, it's been great. Thanks so much. Look forward to seeing you on the 26th. And as I said, anybody who wants to come join us, you know where to find us. Take care. We'll see you next time.